Mminele, thank you so much for joining us
Thank you. Thanks for the opportunity.
Today. You started your career in the private sector, but really sort of made your name in the public sector in the Reserve Bank. What brought you back into the private sector, and more importantly, what brought you into this role as chief executive?
Yeah, it's quite interesting. You're right. I grew up in the private sector, trained as a banker, worked in Germany initially. This is where I started my career. Spent some time in the City of London. Came back to South Africa, worked initially for commercial banks before I went to the Reserve Bank 20 years ago. So it was just a question of having spent 20 years with the organization, the last 10 of which as a deputy governor. I felt it was time for a new challenge, to make my contribution elsewhere. And there were a number of opportunities that I explored, but I was particularly attracted to ABSA because it was for me an organization that was in the process of reinventing itself. It had gone through some element of soul searching, and a new strategy had been developed. It's an organization that wanted to transform, was underpinning the new strategy with a culture transformation journey, was embracing innovation, was embracing digital, and expressing to be wanting to be a digitally led bank. And another issue that was particularly attractive to me was that this is now an independent African financial institution that is invested in the success of the continent and wants to explore the opportunities there. I've always felt that whatever I was going to do was to be in South Africa, so I discarded any offshore options very quickly, but those would have been the issues that attracted me to this role, and I certainly think I made the right decision.
Now, you know the expression, everybody says the new broom sweeps clean. You have come into ABSA at a time where they're about 3 years into their strategic overhaul, and today you announced, in fact, that you have been given carte blanche, that should you want to, you could change the strategy of ABSA. Do you foresee any such changes?
Well, as I've indicated, I had discussions with the board and bought into the strategy as it was presented to me in terms of how it was developed and what it was aiming for, and I found it sufficiently ambitious. But as part of any strategic management process, after a while, you need to monitor, you need to evaluate, you need to see whether there are any new issues in the environment that are emerging, whether you're getting the desired outcomes, and be prepared to adjust and refine where necessary. So I'm in the process of conducting my reviews, getting a deeper understanding of the business, and because the implementation process has gone some way already, it seems opportune, it seems the right time to conduct an implementation review.
So are there any low-hanging fruit that you've identified? You're like, I think we could do this better?
Not at this stage. It might be too early. I think one of the issues, when I arrived at the bank, I did ask people and invited the staff to let me know what it is that they want me to change and what it is that they want me to preserve. And an issue that has come through consistently has been around cultural transformation, that we need to accelerate that. And clearly, I view that as a strategic imperative, is, if you wish, almost the ticket to the game. So there is something in terms of transforming the culture that might help us. The other issue was driving execution, being a little bit more agile, making decisions faster, empowering people more. Those are the kind of issues as part of an overall implementation we'd be looking at to determine where our priorities should lie in terms of what potentially may or may not need changing.
How long are you giving yourself to do this implementation review, and what would success look like to you after?
Well, it'll take some while, it'll take a few months, but obviously I wouldn't want to take too long to do that. It's a process of familiarization. It'll be a couple of months, and then I'll hopefully have a clearer view.
If a downgrade were to happen now in the next month or so, it would likely increase pressure on your CIB branch, which is already taking some strain. What do you advise to clients that are under pressure in that space?
Look, certainly as far as our business is concerned, the downgrade and discussions, the risk of a downgrade happening, its timing is obviously not new. So many people would have spent time thinking about how that might affect them, and we have done the same thing in our business, have put in appropriate buffers as such that, if that were to be a reality, our business is positioned in such a way that we could handle it, and parts of us dispensing advice to our clients and customers would have involved different scenarios, but certainly a downgrade would not come about as a surprise to many of us.
It is an industry-wide problem right now that CIBs from all different banks are taking some strain. Do you think it is purely macro environment that's affecting it, or is there something else underlying that we're not really identifying?
Look, as we've said, the macroeconomic backdrop that we've been working under has been very tough, and generally those businesses have felt the brunt of it.
And when we look at your personal banking and we look at your customer numbers, they're not growing as strong as you want. You've finally been able to to stop the bleed at least, but it's not growing per se. What do you think it is that is not aligning to customers about ABSA's proposition?
Well, I think what we are finding is that actually we are making inroads with our propositions. If you look at the market share gains that we have registered in terms of our vehicle finance, home loans, personal loans, we were in a situation where, if you wish, we were playing catch up. So the key focus, of course, was to stop the attrition, to stabilize the numbers, and which we have. And in fact, the most recent results that were published are showing our numbers going up a little. So we think staying close to our customers, getting to understand them more, refining our delivery mechanism, investing in technology, innovative products that we're putting out. For instance, our banking app, as you might know, is rated #1 by users on both iOS and Android. So we think we're making progress. We've used artificial intelligence and robotics to advance the way in which we respond with regard to response times on vehicle finance, as an example. Those kind of issues we are seeing gaining traction, and we are confident that we'll continue on that path.
I stand to be corrected. You have around 9.7 million customers right now?
Yes, that's the most recent number, having grown by about 1% in the last year.
Is market share in South Africa specifically, in terms of transactional and personal banking, is that a priority?
Well, we had lost market share, so it did become a priority, and it remains a priority to gain that market share, and as we were saying earlier on, also to position ourselves with the customers with what we call primacy, for us to be the key anchor relationship with those customers, which then will allow us to offer them the broader universe of our products. So we will be spending a lot of time in establishing that primacy and making sure that we are close to our customers, we understand their needs, we anticipate their needs, we work with them in terms of their preferences, in terms of delivery channels that they prefer. So it's something that is very, very critical to our strategy.
Now, competitors are good for customers, maybe not great for your business as you try and catch up with what's going on. I don't know if you have a view on Time Bank's most recent relationship or announcement of a relationship with the ZCC religious group.
Well, I don't have the intricate sort of details of that relationship. I've seen the headlines, and how that exactly is going to translate, I'm not sure. But in principle, yes, one might think sort of competition hurts and all of that, but competition is also inspiring. It also gets us to make quality results, and in that sense, we keep saying, and that's got to apply, that front and center in what we do must be the needs of the customers. So if the competition gets us to make better quality decisions, create better products that help us better serve our customers, then that's right. But what we are seeing in terms of the new entrants into the market, they are at this stage obviously playing to certain segments of the market haven't got the broad offering that we've got as a universal bank. We've got propositions such as insurance and others that they might not have. But in the segments where we are going to be in competition with them, we will certainly meet them and make sure that we meet the needs of our customers and stand up to that competition. So we have also the benefit of our legacy, of our strong brands, established brands. So we're not new kids on the block, and we certainly are not going to stand there and watch people taking our lunch.
You've made it very clear in the last 3 months since you started that re-strategizing your approach to Africa or the rest of Africa is important. What are you going to be doing differently to get a real foothold on the continent?
Our African operations have been really, we were talking about separation. The key focus, alongside, of course, supporting our customers, running business as usual, was to make sure that we successfully complete our separation from Barclays. A huge undertaking, both in terms of size and complexity. So we have been focusing on that, and we will be using a lot of this skills that we gained from separation to invest in the business. We have used part of this separation process to also invest in technologies, in systems, to be able to serve our customers better. And of course, in markets such as Kenya, as you know, digital innovative products are very, very prevalent. So we are looking to continue benefiting from that. And we have been launching very interesting propositions and products. If we think about a product like Timiza that we've got in Kenya, phenomenal growth, eightfold growth in people that come back to for loan disbursements, 35% growth, and this was only launched 2 years ago. So there's great opportunity on the continent.
Do you think that ABSA, as ABSA and not as Barclays, has a lot to do in terms of catching up in those markets? Do you have to spend a little bit more on making people understand the ABSA brand as a purely African brand and building trust?
I was very encouraged when I went. I had the opportunity to visit 2 of our countries for the launching of the brand, and the energy, the passion of both the staff and the people that we've met, they suggest to me that they have accepted the brand, and of course we've been engaging with them, we've been preparing for this brand, and we'll certainly build on the long heritage and the long and rich history that the bank has in those countries, but taking advantage of us now being united under one brand across the continent, one purpose, one vision, and exploiting all the possibilities that we see on the African continent.
You're in 12 countries now. Does that mean by the end of this year there'll be 15 countries in the continent, or
no,
20?
what we have done, I mean, I can't give you numbers in terms of where we will be and the speed, but we are looking at various approaches. For instance, we've signed a cooperation agreement with Société Générale, who are represented mostly in the Francophone African countries. So we would be, for instance, together with them, have now a proposition and value proposition that allows us to service customers in 27 African countries to augment the number that we have. And if we need to expand in certain countries in whatever form, that will be determined by the opportunities that we see there. So we will analyze the markets carefully and determine where we need to grow, where we might need to enter, or where we might need to optimize.